Hello, investors. Welcome to a special edition of 18 Minutes with 180 Markets. And the reason I say it's special is because, friends, probably the most driving force of any type of investment is understanding supply and demand, especially in the commodity space. And we are joined today by Chris Lawson of CRU Group, and we're going to discuss everything about fertilizers. And fertilizers is certainly an industry where understanding that supply-demand dynamic is crucial. And not only that, Chris is also going to talk about how it can be a very geographically diverse market. And with that introduction, Chris, welcome to 18 Minutes with 180 Markets.
Thank you very much, Greg, and thank you, 180, for having me.
Hey, Chris, can you just tell us in a couple of minutes about CRU Group? Because I don't think people understand just how many companies and special investors use you.
For sure. Yeah, we're a company that was founded over 50 years ago, and we're active in market research and business intelligence across the mining, metals, and fertilizer space. So we're really focused on steel markets, aluminium markets, base metal markets, and fertilizer markets. My role is managing the fertilizer team. We're a team of almost 30 people based all around the world. I'm in New York. The majority of the team are in London. We've got three people in China, a few others here in the US, and some in India as well. So it's a really global team, and we're looking at the fertilizer markets from all angles. We've got a team that are doing price discovery and assessing prices every week, a team that are looking at the nitrogen, phosphate, potash, and sulfur markets in a great deal of detail. We've got agricultural economists in the team, and we're looking at production costs and the emissions associated with the industry. So yeah, we're looking at markets in lots and lots of different angles when it comes to fertilizers, and yeah, they are very, very interesting markets. Our client base is pretty wide in terms of how the exposure that people have to the market. We work with lots of the different large fertilizer producers that are out there, and you'll often see our numbers quoted in their quarterly reports. And we work with smaller cap producers as well, who are perhaps more in the development phase. And then we also have investors using our work. We have traders using our work. So yeah, there's lots of different types of people that are using CRU numbers for their analysis and speaking with us to get a view on what's happening in fertilizer markets.
Yeah. Hey, Chris, fertilizers, obviously, it's been around for hundreds of years for farmers and growers. In the last 15 years, though, and maybe from a technology point of view, what has changed because the market really has evolved?
It has, yeah. There's lots of geographic changes that are occurring, but also lots of technological changes. And I would say the technological changes have really been happening for a long time. If you look at a developed market like the United States, they're getting more and more yield out of their corn and soybeans and wheat. They're not necessarily applying any more fertilizer. Their application rates are still have been relatively flat for the last 20 or 30 years or so. So there's lots of technology that's going on in terms of seed genetics, agronomy, precision agriculture, things like that, that mean that the kind of intensity of use of fertilizer is actually becoming much more efficient. And that will continue to happen over the longer term as well, and that some of those developments may be sped up a little bit with different technologies that do come in. But yeah, we're also seeing lots more different grades of fertilizer that are out there, and different additives being included in fertilizer to for control release and things like that. So yeah, there's been lots of intriguing changes, and again, those changes happen at varying different speeds across the different agricultural economies. And yeah, there's lots of different reasons for that. Some of that is policy influence. Sometimes governments are holding back advancements, I would say, and other times it's kind of more free market influences. And I think Australia is a really interesting place because it's a very liberalized agricultural market, and farmers are very much incentivized to eke the most out of their soils and their crops, and therefore are very efficient users of fertilizer as a result.
Right. And when we look at it, any market, as I alluded to earlier, it's all about supply and demand. That's ultimately what's going to drive pricing. And within the fertilizer space, maybe can we just start out with the supply side? Can you just give maybe a high level global overview and then go into like where the big potential deltas are within that market?
Mhm. Yeah, so we should break things down across nitrogen, phosphates, and potash, perhaps. So
Great.
nitrogen is produced. It's an energy-intensive fertilizer. Essentially, the cost of energy, being gas or coal, is the key determinant to the cost of producing a ton of nitrogen, which is mainly consumed in the form of urea. So with that in mind, you've got the those with ample gas feedstock, being the lowest cost and the largest fertilizer producers that are out there. So you're looking at the United States, you're looking at the Middle East, you're looking at Russia, and then you've got China as well, which has the largest capacity globally, but is not consuming gas, it's actually consuming coal. So there's some different kind of longer term issues that come with that from an emissions point of view. But yeah, that's kind of how we think about that nitrogen space. And again, we've seen a decent amount of investment in that space over the last 20 years or so with the shale gas revolution here in the United States. There was a big boom in fertilizer prices in 2008, which encouraged a lot of capacity investment in the market. Lots of that capacity has really hit the market over the past probably 5 to 7 years, and has kind of kept things a little bit depressed, or kept prices a little bit depressed as a result. Now we're kind of obviously in a very, very different situation. And there's still capacity that is being added on. But yeah, we're in a much tighter situation now than what we have been over the last 3 or 4 years. So that's the nitrogen space in a nutshell. For phosphates, you're mining phosphate rock out of the ground, you're combining that with sulfuric acid, you're combining that with some nitrogen to produce some phosphate fertilizers. China, again, is the largest phosphate fertilizer producer globally, and the largest exporter as well. Australian farmers are very, very exposed to China, but they're rich in phosphate rock reserves, and that's really the key determinant to kind of determining where phosphate production occurs. Other key producers are Morocco. They're again the largest producing phosphate company in the world now, OCP being the Moroccan company. And then you've also got some production here in the United States, down in Florida. They've been kind of the preeminent largest producers globally, but their share in the market is shrinking year after year after year. And then you've also got some production in Russia, the Middle East, North Africa as well. And then with potash, you have got, it's a very concentrated supply mix for potash. There's varying different forms of potash, but if we think about the main sources of it, it is in Canada, it's in Russia, and it's in Belarus. So they're really your main kind of supply centers. Again, there's small other little bits of production around the world, Australia being a kind of new potential production source in the future. But yeah, those 3 countries are really the key ones there. And yeah, there's lots of kind of history in the potash markets around the kind of dominance of a few different producers, which makes it a very, very interesting one to cover.
Right. And if you don't mind me asking, because it's such a geographically diverse market, and there's definitely a situation between the East and the West players, if you will, is that something that you can calculate into a model per se?
Yeah, so we look at a country by country supply and demand view across all the different types of fertilizers. So we've got lots and lots of different data points. So we're thinking about those usual trade flows that occur. We're thinking about the cost of production and the cost of freight, and the most kind of economically efficient ways to get fertilizer to farmers. So yeah, there's lots of different trade flows that are out there, some more efficient than others, but yeah, we're looking at it from all these different angles. We're looking at, yeah, obviously it starts with the demand. We're looking at what crops farmers are growing and how those crops are changing, what types of soil types they have, what types of agronomic advancements they've got, and all of that kind of works out to what their demand is going to be now and in the future. And then we obviously are looking at the producers as well. We're looking at their economics of production. We're looking at the different trade barriers that might be there for different countries, and yeah, determining all those different flows as a result.
Yeah. And also, Chris, maybe it's a good time to talk about on the demand side. People have changed their eating habits with healthier eating habits over called the next 10 years. And frankly, there's no sign of that trend slowing down. Has that changed actually the demand side for the products?
Not particularly. We've still got relatively robust demand growth across most fertilizer markets, and you see that the patterns of demand changing. But in more mature markets like the United States, like I said before, their kind of demand growth is relatively flat. There's obviously some yearly fluctuations. If you look at a place like China, they've applied way too much fertilizer over the past 20 years, and they're now becoming much more efficient in the way that they kind of consume that fertilizer. You look at a market, I hate to lump Africa into one, but if we look at
Sure.
a large African market, they've got a long way to go in terms of boosting fertilizer application rates to become more productive within their agriculture. So, we're seeing flat markets like the US, we're seeing declining markets like China, and we're seeing, booming markets like Africa and Brazil and those sort of places that are becoming increasingly important agriculture producing hubs. And that's really what's changing the dial on fertilizer demand. It's less so those kind of change in consumer patterns. They're very much concentrated to the Western world, essentially. And we still see
Right.
very, very strong demand for protein from your developing economies, and that is a big contributor to that demand growth from a place like Brazil, who's sending lots of corn and soybean into those developing markets so they can rear their cattle and eat their meat essentially.
Right. And is that to you the big opportunity for us investors are these projects? And I know you don't comment on share prices or stocks specifically, but when you look at places like Africa and Brazil, are those the places that are, I suppose, interesting from a supply demand imbalance?
It's interesting. Yeah, sometimes those best kind of more economically feasible projects aren't in a particular demand center, and sometimes within those demand centers, you've got some projects that are there, but they're very, very difficult to invest in because the ore grades might not be right. There's a lot of political risk there and things like that. So
Absolutely.
you've really got to look at each and every one of these projects for what are the production economics, but also thinking about those potential markets that are out there and the growth in those different markets, and again the barriers to entry there, and the logistics of actually getting your product there. So it's very hard to provide a kind of broad comment on that. It really is a specific project by project kind of comment there.
Right. And then, speaking of investments, ESG, certainly one of the biggest thematics over the last couple of years and growing and growing. Are you seeing the ESG thematic show up now in the fertilizer market as well?
Absolutely, and it really trickles down in lots of different angles, really. So in the potash space, we're seeing more investment from the big mining companies like BHP, who have this year basically pulled the trigger on a big potash project that they're building. They've been talking about this for a long, long time, but they've finally come up with a go decision this year. They're doing that because they see potash as a future-facing commodity. They want to reduce their exposure in the less future-facing commodities like coal, for example. And you're seeing a similar thing with Anglo American, based in London. They're also investing in a potash mine within the UK, again because it has some of those more kind of friendly ESG credentials, I guess. And then, in the nitrogen space, you've got a completely different thing going on. Nitrogen is, it's a emissions intensive commodity to produce. It relies on gas, it relies on coal in China, and for every ton of ammonia you produce, you're producing 2 tons of CO2. So it's an intensive
Wow.
and hard to decarbonize sector. So, but despite that, you're not really seeing investors pull away from it. You're seeing investors looking at the different nitrogen technologies that are out there, and you're looking at nitrogen's potential to, be a marine fuel in the future. You're looking at its potential to carry hydrogen around the world. You're looking at its potential to feed into, different energy and power grids around the world. So there's lots of different potential new markets for nitrogen that are out there that the existing producers are really trying to put their foot in the door on, and there's also lots of kind of newer producers that are out there, newer players to the market that are out there that are really interested in this space. We've seen a lot of rhetoric over the past month, particularly from Fortescue and Fortescue's kind of relatively new arm, Fortescue Future Industries, really investing very, very heavily. Well, not so much investing heavily, but certainly getting involved in a lot of projects focused on the greener version of hydrogen and ammonia.
Right. And so it's fair to say that even though we may not see the benefits of these projects for years from now, it all starts today because you have to start somewhere. And it sounds like there is a tremendous push to go forward.
There is, yeah. It's, again, lots of these we've seen are just a tidal wave of projects on the nitrogen front, or different, it's not so much projects, it's more memorandums of understanding, working groups that are being formed to explore all these different demand markets. And again, projects that are very, very early stage, so there's still a long way from final investment decisions, but there is almost an announcement every day that we're tracking. So there's a huge amount of interest out there. Never seen this much interest in fertilizers or nitrogen before. And yeah, it's been an incredibly interesting last 18 months or so.
Of course, Chris. And, as investors, the markets tend to, I would say, foreshadow what they think is going to happen down the track. And as I said, probably because these projects are so long dated, at the same time, we can't ignore how it's affecting share prices right here, right now, because every time, as you said, Fortescue puts out an announcement, the whole complex goes crazy. So it's certainly critically important. Hey, Chris, can you just talk about geographically for a second? Is there a big price disparity between fertilizer products depending on where you are globally?
Not usually. I mean, there has been some of those different disparities that have opened up this year, but we look at prices and we look at the key benchmarks, and yeah, we understand the different spreads that are out there and the usual historic spreads, but yeah, it's not usually too different. Again, there's lots of different things that will influence that from a policy perspective and what farmers are actually paying on farm compared to the freely traded market. But yeah, it's a commodity, and there are different kind of additives and premiums that some different forms of those commodities can get, but they're essentially the same thing. If you're thinking about again, urea is the most popular form of fertilizer globally. If you're thinking about a granular of urea, there's not too much difference in that urea that you're buying from Russia compared to China, compared to the United States. It's just all those other bits in between that create those different disparities.
Yeah, and obviously with transport costs really going bananas, as you would say, when you hear prices tripling down here in Australia, it's certainly, I suppose that the locally produced product or the closer produced product would have a better pricing mechanism. Hey, Chris, this has been amazing, and it's clear that fertilizers is an incredibly complex space, and it's not all one size fits all. Do you have any closing remarks for people to watch for?
Yeah, there's a lot of excitement out there at the moment, and I would put a word of caution out there. This isn't going to last forever. The fertilizer market is still, there is still a decent amount of supply that's out there. You only have to wind back 2 years ago, and the market was really, really down in the dumps. And there's been lots of different things that have happened over the last couple of years with COVID and incredibly strong agricultural commodity prices, which won't be there forever. So I would kind of finish with a bit of a cautionary tale on that front. That being said, our outlook for the fertilizer market generally is still pretty constructive. It's more constructive now than what it was a couple of years ago, and the real base for that is the better or higher outlook for gas and those other kind of hydrocarbon feedstocks. They are becoming more expensive, and they will become more expensive going forward, and they are a real key determinant to the cost of producing fertilizer. And again, there's lots of different potential new markets out there for these traditional fertilizer players. And again, they're still very, very much in early stage development. These are very, very early. I really must stress that. So there's still lots of research that needs to be done on this to really determine what the market size in these potential new markets is going to be going forward. But it is all very exciting. There are going to be lots of good opportunities out there, not just from a kind of production and distribution point of view, but there's going to be some great opportunities in investing in different types of infrastructure and different types of application methods and things like that. So definitely continue to watch your space, but don't get too carried away just yet.
Thanks, Chris. Be in touch.
Thank you.
Thank you for watching another presentation by 180 Markets. Don't forget, if you want access to thousands of ASX capital raises, head on over to 180markets.com.au, sign up, and get on board for our very next capital raise. Thanks for watching.